All right. So, well, I actually have way pulled up WEI. That was the other one. So we were looking at SRRK and how it showed up on the squeeze indicator and WEI. Now, I actually wasn't using the squeeze indicator yet, and I called WEI uh, in the chat room before it went to $10. I called it like 15 minutes beforehand, and it went from 3 to 10. I'm not actually looking at that spike. I'm looking at a different spike here. But as you can see, that squeeze indicator, and this is on uh, 39 minute time frame. The squeeze indicator, so the MACD is in a positive position. I mean, it's on top of the slow. The fast is on top of the slow, just barely. I probably would have played it in this spot and maybe got shook out of the position when it went down, because that's always a bad sign, especially on the squeeze indicator, when it starts to go down like that on the actual momentum up and down bars, uh, especially because it could squeeze down, which is terrible. But as you see the stochastic, all my other indicators kind of reverse as it's going through that. And then it reverses as well. It squeezes again. So this may not have been your prime entry, just because of the MACD just sitting on top of it. I did say the MACD sitting on top of it's not a bad entry. So I may have entered there. Uh, but this is a great entry. So it squeezes. The MACD is way up already, and you have a pretty good. The squeeze indicator is basically going to tell you that it has the potential to go much higher than 10%, 5%, whatever type gain you're used to. Um, that's what the squeeze indicator kind of is supposed to give you an idea on. So in this case, you've already got an uptrend. You missed a good, that's more than 10% on that uptrend right there. But you got a squeeze indicator on that uptrend. Everything looked great as far as your other indicators go, and you get this great, it's not 100% spike, but close to it, uh, close to 100% spike, assuming you could get it out at the top, even if you didn't getting out up here or whatever. Still a great play. That's on WEI. I was looking at, I believe it was the 195 minute. It does show up on the 78 minute as well, that it squeezed here before this 10 minutes. So again, same thing. Now the MACD is flat, but this is where I called it. Way was a play that day. It doesn't really show on the chart because of this huge run up to 10. I guess if you zoom without zooming into that. So it was a decent play that day, and the day prior, for before making large run up, but um, it squeezed on the indicator, and that's where that scanner comes in. It would at least be on your radar before it made this huge move. So I actually didn't call it until it was later in this, before that move to $10. Um, because I called it at $3 around here. So since it's on a 195-minute time frame or whatever, you don't really see the daily here. Um, but just being able to get out ahead of it, you know, you've got this huge squeeze and it starts to run, just gives you an idea. You're looking for support and resistance, when to get in and out of a play. That squeeze indicator just gives you an idea. Hey, man, this might be one that can run a lot more off of this news or off of Way wasn't running for any reason at all, whatever. Um, it was just running. Uh, but still, just it's a mover on your radar, and it was squeezing before. It gives you an idea that, hey, this could really go a good, a good long way, so to speak. Um, Sorry, I went off on a tangent there. Let me transition to the scanners that we were talking about.
How dare you? No, it was related because you were talking. You had that from one of your. Oops, you went to.
Why is it doing that?
Go to click on your channel. There you go.
Oh, yes. Thank you.
I was like, wait, is that a pop out? I
Uh,
couldn't tell.
so I haven't gone through all these scanners. I do have a lot of these scanners already, and just looking at like the engulfing scans, it has all the same tickers, bullish and bearish. Um, the Doji scans, it didn't have all the same tickers that my Doji scanner picked up, but Harami, Hammer, those were all the same options. I don't have a scanner for that. OTC volume scan, that could be huge. One thing to make sure you pay attention to with volume is price, because if the price is really low, so what if it sold 535 million shares? Because there's people that trade 300 million shares on a stock price that price. Uh, so that doesn't really mean much. This
Just a
is the number of
reminder, quick.
trades.
OTC volume. Anything OTC shows up with that OTC roll reaction. So if you're not already following that OTC, as soon as you click that, everything OTC reveals.
So this is your number of trades on the side here. Also, very right column. So number of trades you want to be in the thousands with an OTC for you really be paying attention to it. So that would be on the radar, and that would be on the radar. Just because of volume, you don't really care if it's going up or down. You care about the volume on the OTC because they do make these 10% moves. I've showed it with Nimley, and Nimley doesn't have a lot of volume. So just imagine a stock that does have a lot of Nimley can easily go 10% in candlestick, and it's the same with same with these. So if it's got a lot of volume, got a lot of trades going on. This is a daily scan. I think all of them are daily scans. He did say
Yeah.
delayed for 415, delayed 15 minutes was on that one scan, the surge scan. I don't know if that's the case with all of these, um, but if that was the
Sorry, my
case,
mic was
they're all
off.
delayed 15 minutes.
Yeah, only the
And
Surge scanner is a 15-minute delay. Everything else is otherwise a daily scanner. So
so yeah,
those
I would
results are going to
say
be at the end of the day.
after market closed on whatever day is when you'd really, I mean, you'd really want to be running these scanners. Now you could uh, look at like an engulfing candle scan, like we have throughout the day, actually shows you the good runners that day. I don't know if these will do that or if they just update daily. We'll find out because we just added them. But currently, the way I would use this is to make my watch list for the next day, mainly for swinging, but also I have noticed that you do at least if you just want a 10% gain, 20% gain on a stock, uh, most of these will give you that on the lower price stock, not so much on the higher price stock, but on the lower price stocks that have a good range on previous days are going to continue to have a good range. If it's only moved a penny here, a penny there every day, then I wouldn't be paying attention to it. But my favorite is actually the star pattern scan, Morning Star and Shooting Star. Shooting Star is a bearish indicator, and Morning Star is a bullish indicator. Um, so the Morning Star scan is actually the one that I use for most of my swing patterns. It's a 3-bar scan that actually uses, uh, you can reverse it for the Shooting Star, but it uses a large candlestick wick on day one, followed by a doji, which is just basically an inside candle that we've talked about before, on day two, followed by a large reversal candle. In this case, being a morning star, you're going to have a bearish one first and then a bullish on the third day. Um, Reversal candle, uh, that forms the morning star pattern. Same thing for the shooting star, but the opposite. Um, the beauty with these scanners is it actually is giving you uh, stocks on the doji. So the third day hasn't actually formed yet. Um, So I really like this scanner because it's showing a morning star that could form. A morning star does in fact form on something. You're looking at a fairly large gain. It usually is going to gain at least 3/4 of that bearish bar on day one. So if the bearish bar on day one went 50%, you're still looking at a 30-40% gain. Again, I use my other indicator, my squeeze indicator, that could give me even better idea of whether that thing could break out really big. But the fact that it gives you on the scanner on the day two really allows you to get in on the pattern at the earliest. So it's two patterns that I like. It's the inside candle that I've talked about for forever now, which is only a single candlestick that's inside it. Now, a morning star, generally speaking, you want that doji to be below the bearish candle, not actually inside of it. But either way, you get both of those on these morning star scanners. It's not always a doji that's below the previous day. Sometimes it's inside of it. Sometimes it's not really what I'd call a doji, but it's still considered part of the morning star pattern, where it's a smaller candlestick body than the previous day with longer wicks. And those longer wicks are usually inside or below the bearish previous day candle. That's going to reverse to the bullish. It's very, very consistent. I've already showed you all how consistent the inside candle can be on any time frame. It doesn't matter. This has the inside candle for a reversal on the daily. And generally speaking, a morning star is going to give you a big gain, at least on day one. And what I'm looking for, I'm going to take it off of this scanner right now. I'm going to use these scanner symbols, SSL, VOC, whatever, but I'm going to switch it to my chart so you can see the chart as well. So SSL is the first one. I usually like to view this on a daily because it's a daily candlestick pattern. So I want to see the actual daily myself. I like 9 months. I don't know why 9 months. So let me click on 1 year. 1 year, 1 day. 9 months I like. I don't know why. 3 months is okay. Well, you can use 3 months. Come on, SSL. Now taking these on. So yeah, 9 months is too. I don't really like it. Too much going on, I guess. I don't really. Too many candlesticks. So 3 months would actually not be a bad time. Either way, I'm looking at the daily candlestick. I want to be able to see it. So taking off all of this other crap would actually help. I could switch the chart. Just have my EMA lines there and my squeeze indicator, or you could have whatever indicator. But basically just giving you an indicator of the why did it change that way? Oh, because that's my grid, right? Go to 6. But giving you to see what it's talking about, the morning star that it's forming, and to see where the stock's been before, what kind of range the stock might have as of late. And what I mean by range is how much it made from this day to this day. So in this case, for this morning star, I probably wouldn't. I might watch it to take a look at it, but it's not really my primary play, mainly because this doji is way high up on this thing. So even if it does reverse, technically speaking, it may fill the gap all the way up, to the previous consolidation point. But it may just have a small, a small bullish reversal. More than likely it will reverse. So you could still look at it for some sort of gain, but that's 522 to maybe 560. That's almost 10%. So if it just gets to the top of the previous candle. But it's not necessarily something I would add to my watch list. VOC is next on that list. Come on, Thinkorswim, don't be slow. I wouldn't even call VOC a morning star, to be honest, in this particular case. I would actually probably look at playing it, though, just based off of what I would want to see why it spiked here to begin with, to see if that's based off of news. News always interferes with any candlestick pattern as well.
It's an energy play.
Energy.
Yeah, there's no recent news. No, the 29th, yeah, there was news. It was just related.
Yeah. It does have a squeeze
Ex-dividend today.
That it failed on. It failed on a squeeze indicator. It might squeeze higher. But that would be something that, in my opinion, I wouldn't look at that. DMAC is the next on the list, but that's what I do every day with all my swing trades that I post. That's what I'm doing, is looking at candlestick patterns and looking at mainly this one. I do like the engulfing scans well, but you'll get a lot of the news breakouts on that, because all that is an engulfing candle. So you're already going to see that on my Thinkorswim scanners that I already have. Also, I'm going to have most of those already. I am interested to look at this breakout screener that we have in the Discord. That one looks pretty interesting. Like, I'm going to key in one of those. DMAC does not look interesting, by the way, for a swing for me. You're looking at less than 50 cents over the course of several days. Not really what I'd be looking for. But the first one on that breakout is AIRI with a ton of volume at a price of 1.32. So it must have had news, I'm imagining. AIRI. Can you look that up? You guys have a nice reversal candle right here. That inside candle, that's beautiful. That's really when you want to play inside candles, is something like that. A downtrend like that with the inside candle like that, that's gorgeous.
They had earnings on the 29th.
Oh, that's what they ran on. I can see that now.
Yeah, it's right there at the very bottom.
Yeah, right here on my chart. Right there on my chart. But I would say this stock was going to reverse, earnings or not. If it didn't have earnings, it still was going to reverse if it had this same type of candlestick pattern.
What was the date of that previous run up?
This over here?
Yeah.
The 30th of September.
They didn't have any news back
But either
then.
way, it looks like this breakout. Let me look at another one. No, that's too high priced. NWG 319. I wonder what makes it a breakout. Is it that? I see the candlestick.
Yeah, there's no descriptions as far as what classified it.
That's basically a morning star pattern. So is something like that, where you've got the big bearish technically you would want this doji or inside candle. That's actually a hammer, hammer candlestick. You would want that to be down below the previous day for it to be a true morning star. But that hammer is also huge, and those hammer scans are also in Discord. But that's what you'd be looking for, though. Either way, the point of it all is to go through the scanners, and you're going to look at each one of these stocks, and you're thinking, okay, I'm looking at 100 stocks. Not really going to take you that long to look at 100 stocks if you know what you're looking for. And you basically want to be looking for something with range that's going to give you a decent gain, or something that has spiked before, like say SPI. SPI was on my watch list, did quite well. This was maybe 2 weeks ago, I forget. But it was after the initial spike on SPI when it had its huge spike. It had an inside candle after several days. I think it was after the offering that they had as well. But after the offering and all of that, had a nice inside candle, said to play it, and it went another $3. It reversed the next day. It actually reversed the night before because Lokiwa played it after hours, and he ended up making some money on it. So it actually reversed in after hours, but it continued that reversal for another $3 a share from 5 to 8. And so that's what you're looking for, is something that's going to give you the potential to make the gains that you want to make. When you're looking at these inside candles or any of these daily candlestick patterns, none of them is going to tell you, hey, this stock squeezed $3 to $10. All of these scans on the daily like that are going to give you a stock that may be a good, and so it'd be a stock that you want to hopefully bring up Benzinga Pro through our affiliate link if you're using it. But if not, you can get all this type of information, Finviz or really wherever that you get your general company information. But that's why I count Benzinga Pro so much, is because it's all available to me right there in one spot. I get all my news. I can see if they filed for a shelf offering any recently. I can see if they filed for, insider buying, anything that's,
Everything
pertinent
at
to
your
whether I think the
fingertips.
stock's going to move. Yeah, exactly. Everything's there for you. Float data, all that kind of stuff. Anything financial data.
There are
It's all
minor,
there.
I think it's more like OTCs, and I think it's Amex as well. Those are the two that tend not to show the float data,
Yeah,
but
yeah. Mhm.
otherwise, I mean, anything
You can
else,
usually
yeah,
figure
it's
that
there.
out. Just so anybody's not aware, and this is how the float scanner works on Thinkorswim. If you ever find somebody with a float scanner, is all they're doing is the outstanding shares. Okay, so there's the float scanner has an outstanding share scan in it, and you're setting that to your low float value, whatever.
Yeah, it's
20
a
million,
manual
whatever.
it's a manual indicator.
So because outstanding shares, the float can never be higher than shares. Outstanding shares is the number of shares that somebody has, or a company, a ticker has in total available. And then a float is garnered from their total number of restricted shares subtracted from their total number of outstanding. And restricted shares are shares already owned by insider buying or institutions or shorts. Anybody that's already shorted is already shorting the stock. Those are restricted. So that's where the float. So Thinkorswim doesn't have a float, or any place that doesn't have a float try to give you a float of some sort. All they're doing is taking the outstanding shares. And same thing with Benzinga Pro. Occasionally, you'll see the float is the same value as the outstanding shares.
That data is only
a lot of
updated twice a month,
Oh
so
yeah, exactly. That's one
it's
thing.
got to
is
be
they did
tracked one way or another.
short daily the
Somebody's
same
gonna
way.
have more
Short daily.
accurate, but
Yeah. Yeah, there is ways to track it. You can go back at yourself and track it as well.
you just got to get
If
that
you're looking
update.
at institutional buys, insider buys, The only thing you don't know are shorts. But there is a short website. I've posted it before. It's probably still available somewhere in the Trading Academy that shows you the number of shorts on a particular ticker. I don't know how. I've never really used it to a great extent, so I don't know how accurate it is, but it's there.
We'll make sure it's
really
added under the shorting section.
Yes,
under.
we'll move it to the shorting section as well. But it's not just good for shorting; it's good for knowing how much other people's stock. So it could be good for squeezing as well. Which again,
speaking
I
of squeezing,
that CTM squeeze indicator does not necessarily mean short squeeze. Just
I'm curious. Pull up PEIX, because oh man, it is getting hurt. I want to see what this looks. I already closed my chart, unfortunately.
So that's your daily. Yeah, it's definitely lost a lot of its luster there, Buckaroo. TTM squeeze indicator, again, this is one where you would want to play it now. If the TTM squeeze indicator showed up anytime now with this current downtrend, I wouldn't play it. That's what the EMAs are for that I have on the chart. But this TTM squeeze indicator right here, it's already above all of the EMAs. That would have been a great sign to have a continued that. And that's 100%, 5 to 11, over 100. But even then, it's squeezed here too. It's squeezed before the big run up. It's just that's more of a risk squeeze when it's flat like that and you're playing something that's squeezing off that didn't have an up. You really need to see this this right here, these bars going up like that, because that's verifying your squeeze indicator from previous. And then of course you've got the earnings here that you wouldn't want to play necessarily through PEI final.
No, that was the earnings that you did want to play.
Well, yeah, it was in this case, but you never know with earnings point.
Yeah.
Who knows? This whole run up right here.
Also, you got to do your DD.
Yeah, it could have been earnings getting priced in, and even though it had a great earnings, like Rocket did, Rocket Mortgage had a great earnings and still went down $10 a share or something like that, just because people's expectations were high, or that's why they were buying it in the first place. So it was already priced in. But yeah, those scanners are great, man. I definitely pay attention to those. You don't have to pay attention to them before the end of after hours, like I was saying. I still think
it's almost something that if you're a 4 a.m. trader, wake up 30 minutes to an hour before and start scanning them, because I mean it's already done. I mean before you go to bed, something like that. You got with those scanners on Discord, yeah.
But what I'm saying, what you want to pay attention to is if something shows up on one of those candlestick pattern scans. So most of those candlesticks are reversal. Very few of these candlestick patterns that you see are something like a continued.
Right.
The only one there would be the engulfing. That's a continued. Anything in the engulfing is an engulfing candle already, off the news or whatever. So that's a continued.
We're looking at Thinkorswim. Are you showing something else?
No, right now we're looking at Thinkorswim.
Okay. I just want to make sure.
So
I didn't see your cursor.
I'm just saying, in general, those star pattern scans. I don't know about that surge scanner, but that looks really cool too. The surge scanner, I really like that. But the Harami scan, the inverted hammer and the hammer scan, doji scans, those are all reversal scans. So if you're looking at that, you already know that it's supposed to reverse, so to speak.
Yep.
So if it did the reversal after hours, because that candlestick formed at the market close. So if it already went up after hours 50 cents, say the stock price was $1.50, and it already went up after hours 50 cents, then the the upside of the following candle has already formed. So you don't want to buy in on that.
Yep. You gotta wait
Because it's
for
already,
some form of pullback.
yeah, it's already
Well, yeah,
formed
yeah.
on
It's
the
not saying that
upside.
it's going to be necessarily a 4 a.m. play per se, but start running
No,
those
that's,
scanners to see what
yeah,
kind of
you
setup
can
there
definitely use it.
potentially could be,
For instance, if you
or
wanted to
otherwise
use it at
finding
4 a.m.
those to start watching. Because shoot, it could
or
have
7
an immediate
a.m.
pullback at 4 a.m. to where there's your entry if your indicators are
Oh, yeah,
setting
yeah,
up.
yeah, yeah, yeah. What I would say is if you're going to use them at 4 a.m. or you're going to use them at 7 a.m. or you're going to use them at 9:30 a.m. or whatever time you wake up and you're going to use those candlestick patterns. If it has already made the move, then you need to be looking for something else.
Yep.
It's already formed the upside of that candlestick, and now it's forming the downside of the candlestick.
Keep it on your
necessarily.
on another watch list or something, because there's not necessarily that day or the next day. I mean, very well could
Oh
be,
no, most
but you
people
may have
work
another
well.
pattern,
Yeah,
because usually you're
yeah.
gonna have some form of a continuation after a consolidation period.
Most of these that I
Look,
put, at least the ones that I put on my watch list, have swung for several days after the candlestick. So it's not like you, even if you played it on the high on the first day, most of these have gone higher on day
Yep.
2 and day 3 and day 4. So,
Yep.
Yeah, definitely, that's what I mean. Definitely something that you would want to watch. But again, that's the beauty of these scanners showing price and volume. I wish it showed like average volume or something like that as well. But it gives you a good idea on, hey, this stock that people are buying and the price. This is a stock in my price. So you can skip over a
You should
bunch of
show us Discord.
that you don't want to use. Volume.
Thank you.
Right. So BLRX, a lot of volume, low price. That's something I want to look at.
We
But
actually, I think it was Boss Baby called that out. Actually,
one of
both
my
Boss
best
Baby and Lokiwa, I believe, both were calling that out this last week before it
one of
was
my best
starting to move.
ones, my best plays lately though was a $30. What is it? WLDN. That was one of my best swings. CEI was my best swing. It was over 100%. I have one other. I forget that was over 100.
Oh yeah, that was a good one.
But WLDN was a $30 stock, and when I first got it, I saw the range. And that's what I mean by looking at the range. I knew it could run, at least 10%. And that's what I look for in any stock is really a 10% gain. But it ran a good 30% after that candlestick. It was a great swing. So there's nothing wrong with an expensive stock. Just keep that in mind. As we've seen with the likes of Tesla, everything's not the likes of Tesla, but there's nothing wrong with anything expensive, depending on what you're trying to get at it. So my brother plays the higher price stocks, but he holds them for a long time, and he buys them at the right time. He took Fastly from $22 all the way up to over $100 a share, and then sold it before Fastly crashed back down to $60, $70 a share. He sold it in the highs of $100 a share, just paying attention to that particular stock, and it's a high price stock, obviously, but and knowing
Logistics companies are really good ones to watch and pay attention to, especially right now, because they've been recovering so much, and now with politics and COVID, they're starting to get some pullback.
But that's the point. If you're looking at anything that's for instance, PEIX, since we were looking at PEIX, if you were using the swing indicator that I was talking about, and that's the only thing you're using in this instance, what I was talking about on the swing indicator is if you want an uptrend. Now, PEIX, the swing indicator is not really built for penny stocks as far as swing goes necessarily, because penny stocks do whatever the fuck they want. More as far as the uptrend value goes, it's more for the higher price stocks. But in this case, PEIX has a great uptrend, pulls back, starts to consolidate, gets your swing indicator or your squeeze indicator again continues to uptrend. You could have bought it at any point in this squeeze indicator. Had an inside candle even on this pullback if you were looking at but that's the prime as far as when you're looking at this squeeze indicator on a daily candlestick chart. That's what you're really looking for, is something that had a good uptrend, is now squeezing. More than likely it's going to continue to the upside, and in this case you held it for over a month if you played that squeeze, just over a month, but it went from under $5 to $11, and that's 100% gain. You don't want to put all your eggs in one basket, but how many of us, honestly, I would say Aaron is probably the only one in our group that could say their portfolio did better than that in that time.
Yep.
Mine didn't do better. Not even close. I don't know anything about Aaron's portfolio. I just know he seems to do pretty well. But yeah, that's 100%.
Suki did he I don't know his actual percentage.
Since you're talking about Suki, we're going to talk about, I don't know, Suki.
I know he made out pretty well on PEIX.
Well, I know, but his new study, or his new way of trading, and it's a great way of trading. There are plenty of people, but you just have to be careful, and that's why he talked to me about it. He wanted to know, what am I looking for? User defined.
I don't know what you're talking about.
Well, he might want to talk to you. He'll always talk to you about everything. Yak colored RSI. Well, it's not going to do with this particular chart. But what he does, well, let me go to daily. Something
the RSI
has some top RSI and bottom RSI.
SPCE or XPO. Those both
well,
will.
Tesla. Especially if I put it on a 5-day, 5-day. I'm sure it will. So the way that Suki's been trading lately, and this is a fine way to trade, is using RSI. RSI is when it's below, so there's the zero line right here, this gray line that goes across, solid gray line. When it's below the zero line, it's considered oversold. When it's above the zero line, it's considered overbought. So technically speaking, when it's above the zero line, it will soon be sold. And when it's below the zero line, it will soon be bought. So when it's way above, usually people use 80 and 30. In this case, we're looking at a longer time frame chart. So Tesla actually doesn't climb above 80 at any point. Not 80 and 30. Yeah. Is it 80 and 30? 70 and 30. But anyway, when it goes low, so his idea, and this is the way he's been trading it, and he can trade it from a mobile phone, and that's why he's been doing it this way. He can trade it while he's at work using Webull. He doesn't even use a chart. All he uses is level 2 and RSI. And so he looks at the top gainers, the top volatility, the ones that, whatever, the top stocks, the sizzling stocks, whatever, wherever he wants to get a stock that moves. and then he's looking at the RSI, and when the RSI drops below certain value, I don't like this RSI. Well, I'm not used to it. Probably just fine. But I'm going to go to a traditional.
Yeah, the color shading will throw you off.
Well, I'm used to these two bars right here.
Yeah.
So how do I get? All right. So RSI is the bottom indicator here. And the way RSI works is 70, 30 is what it's currently set up at. So there's no actual zero line indicator, but your zero line would be the middle, basically. 70 is considered way overbought. 30 is considered way oversold. So when it's below 30, it should go back up. It's above 70, it should go down. Just logistically, supply and demand speaking, that's the way it has to work, pretty much. Not always, obviously. Stock is. You get the point. But so what he's doing, and this is a very smart way to play, is so what he's doing is as soon as Tesla drops below this 30 line, he looks at the bids. And when he starts to see bids at 10,000 shares, now obviously it would depend on the share price of the stock. But when he sees the bids at a certain value of shares or dollar value based off of how many shares, he places his bid at 1 penny above that. So the reason, the mindset here is that it's, first of all, it's oversold at this point, so it's got to reverse at some point. And I have support below me. I have somebody that's buying a shitload of shares below my entry. Now, obviously, you'd have to watch the level 2 because those guys will change their price to beat yours, and you might have to keep on raising your bid. Your bid is no longer as low as it used to, just because of the fight. But if it's a stock with a lot of liquidity, you probably won't have that. So that's what he does. And then he's guaranteed that stock's going to go up a little bit because the guy right below him is about to buy 10,000 shares or however many shares. And then he holds that stock if it continues to rise. I assume he has some sort of stop loss or watch in place to sell when it's in the middle here. But he holds that stock until it's above 70. And then he sells at 1 penny below all the $10,000 share ask. That's all he does. That's it. And he doesn't need a chart. All he needs is RSI and level 2, because as soon as it gets below a certain point on RSI, he starts looking at the level 2. He sees that there's a bunch of support on the buy side, so he buys just above those guys, knowing that they're about to buy. His stock price is going to go up. And then he'll sell right before they sell. You assume they sell, but the large seller.
It's technically considered scalp trading, isn't it?
It really is. It's a form of scalp trading and using indicators that are, I mean, it's, time and time again, if you looked at this particular chart and looked at this RSI, all of these rises and falls would fall with what I.
Right, yeah, this isn't necessarily a good example, but.
Okay. Now, RSI also, if RSI is going up like this, even when it's above that 70 line, if a stock is surging, that does not mean it's going to sell off. In fact, a lot of people actually use the RSI as a way to tell them with other indicators that that's their buy point. When it's above 70 on the RSI and they have some other indicator that they believe in, EMA
Pull up
4, for
Peloton.
instance. But EMA 4, for instance, I know somebody that uses the RSI above 70 and the EMA 4, the candlestick currently above the EMA 4. If that happens, he buys it because he just knows it's going to continue to run. He says the RSI is a way to show you how much fuel in the tank stock has. So if the RSI is way high, it's got some fuel in the tank to run. Yeah, you could use it that way, but you would want to use it with different indicators if you're going to do that. So yeah, this is Peloton on the 5-minute chart. Peloton yearly chart, beautiful. So where's March? My brother bought Peloton in March. My brother bought Peloton here at the lows.
That's like that's when I should have been buying XPO.
I don't think he sold Peloton. He may have sold it by now. I'm not sure. Once it got to 139, he may have sold it before then. He sold Fastly
up there.
already. He sold Peloton. He knows Peloton's earnings are going to be really good, their next earnings. So I don't think he sold it because they're
I don't know.
running
They got
off
some
of
real competition now with Amazon.
No, they have no competition at all whatsoever. Because you see, the thing with Peloton is, even if they have competition with Amazon, right? Peloton is behind on earnings, similar to like ACB and a lot of other stocks. Peloton just released their Q4 earnings from 2019. That's what these earnings are here that you see before this big run up. They had really good Q4 earnings. Their Q1 earnings, okay, Q1 for anybody that doesn't know is the beginning of the year. So what is the most popular?
Trash.
Yeah, exactly. The beginning of the year is trash. But what is the most popular New Year's resolution?
Save.
To lose weight is the most popular
duh.
New Year's resolution. Okay, so Peloton in any exercise equipment, in fact, does really well Q1. So you don't have to worry about Q1 earnings. Q1 is the bread and butter for Peloton. In fact, that should be their best earnings every year is Q1. Q2 actually is going to do really well for Peloton because everybody had to stop going to the gym. Everybody bought Peloton bikes, have at home because they couldn't go to the gym anymore. And the same thing goes for Q3 earnings. Guess what? The gyms still aren't open. And I need a fucking bike. I'm tired of it. And so I want to buy a bike. So Peloton's earnings are going to be good again. Q4, probably not. Well, maybe. Who knows? Now that everything's changed. That's the thing with this whole COVID shit. And now that there's a second wave of COVID coming on, is that it really is going to change the way everything, like if we conquered, Trump was saying back in the day when I was playing XSpot, and should have held on to it to make bank off of my entry. When Trump was saying in April, he wanted the COVID gone by Easter, it's going to be gone. If that was the case, then plays like Mark would not have been a great play. Or plays like XSpot would not actually have been a great play. That's why I got rid of XSpot.
Nautilus is a very good comparison to Peloton. That's one of their competitors. That's who owns Bowflex. I just pulled them up. Yeah. I don't know why I haven't thought about that before now, but I mean, now it's up to last price is $21.97. I mean, back in March it was down under $4.
And that's where you have to play the market smart. Okay.
Yep.
That's where I kind of was dumb. I wasn't dumb. I was just looking to get into something else. So when I started day trading, is when the market crashed, February, and I kind of instead of thinking about it like my brother did. My brother actually did the same thing I did. He looked at his portfolio. We've both been long-term investors for a very long time. He looked at his portfolio and said, something's got to change. His mindset was, okay, let me look at the long-term investment stocks that are now all really low after this crash on COVID that are going to do really well
Yeah.
due to COVID. So he bought MasterCard, PayPal, Fastly, Salesforce.com, Teladoc, all the stuff that was going to prosper because of COVID. Tesla would not have been a buy for. Nobody would have thought electric vehicles.
What about Amazon? Did he
Amazon,
have
no,
Amazon?
Amazon was a buy for him, but he didn't want. It was still at $2,000. Oh, well, it got down to 16 or 1,600 a share. Sorry, 16. It's still too high price. That was still too high price. Everything was under 1,000. But he did buy Shopify, stuff like that. He looked at the stock.
Everything that was pretty much based around digital platforms.
Yeah, fintech. He's really big into fintech, except for the fact of the Teladoc, Peloton, and stuff like that he played was really based off of COVID, knowing that, hey, all this shit is going to do really well. And so that's what you got to look at on the market is stuff that's going to do really well. So going up into this week right now, okay, we've got the election coming up, okay, who knows what's going to happen, okay, but I have some good ideas, all right? Good ideas.
In my opinion, regardless, the market's going to bounce.
Not as well, yeah, probably, maybe.
I mean,
but
it will bounce eventually.
If Biden gets elected, electric vehicles will do really well. If Trump gets elected, coal, oil, all that shit is going to really, it's going to be the flip-flop of it. Electric vehicles might not do so well. That would be something that you would want to keep an eye on going into the election. Most people seem to think that penny stocks will do better under Biden and blue chip stocks will do better under Trump. I could see that as being a point, but blue chip stocks are going to do well, in my opinion, right now under any candidate. Like you said, it's going to bounce. I think that the stock market is going to bounce no matter which candidate gets elected. Really, because
I think Monday could ultimately be another red day or more of like that consolidation lull.
It's going to be a consolidation lull day.
Yeah. Where Tuesday, it's all based on what's going to kind of happen. And that lull could happen through Tuesday too because we're waiting for those results or some form of numbers.
Yeah, exactly. And that's the whole thing, though. That's the thing that's going to kind of actually lull everything. So you've got the election, right? Well, you're going to wait for the election. They've already said that there's a good possibility due to the mail-in ballot, stuff like that, the absentee ballot. We're not going to know who wins the election Tuesday night.
Nope.
Okay? It would have to be a drastic swing to the one way or the other for us to have a result on Tuesday night. So if it's close, we're not going to know. We could not know for 2 weeks what some. We won't know for 2 weeks. So the stimulus is going to get on hold until the election is over. Once the election is over, I can guarantee you that the stimulus will probably get done shortly after January. Maybe not. Technically speaking, because all the election, none of those people go into office in January. So none of those.
It's an emergency. They might.
Yeah, they might. They might. So that's the only problem. You've got the stimulus also, and COVID fears. COVID cases rising and all that kind of stuff.
Yep.
It's
and winter months.
Yeah, it's going to play on the market one way or the other. No, the winter months are good.
Well, I mean, because of COVID during the winter months.
Yeah,
that doesn't
yeah.
help the cases as far as the rising. So I mean,
No,
typically
in
when the
fact,
market is rising because of the holidays, from Black Friday, which is already happening on a daily basis currently because of
well,
COVID.
I have a feeling they haven't talked about it yet much. Uh, but I have a feeling that, so they say your death toll on COVID is really, really low. Well, it was really high at one. And if I recall, that one point was during colder months. So there's a
Hmm.
good chance that the death toll could also spike during these colder months. You know,
Yep,
because
that's what I'm afraid of.
I mean it's colder. I mean that's, you look back in history, it doesn't matter whether there's sickness or not.
You have a weaker immune system
The
in the
the
cold.
winter time is
Look at
when more
Australia
yeah,
currently.
when more deaths happen.
Australia's
The
in
ice
their
age.
winter months, or they just came out of their
Yeah,
winter months. They were
yeah,
in
yeah.
a
That's the point.
extreme fold because of their death toll
Yeah, that's a good
and
point.
infections.
So
So thinking anything south of the equator, they when we're sitting here in summer months, they're in their winter months. And you
that's
look
what
at
I'm
these
hoping
countries,
for.
South America, they were on the rise, and nobody was really, especially the media, they weren't pointing that out like, hey, they're in their cold winter months. Like, there's
On
reasons for their rise.
on Monday, I'm actually hoping for a downtrend both on Monday and Tuesday, because I'm not going to be able to play the stock market too much on those days. I'll play them a little bit, but
I mean, it'll
probably not
be
too
for
much.
everybody's advantage too, anyways.
Wednesday, Wednesday, Thursday, and Friday are my big stock market days this week, and if it downtrends, I have a larger bounce possibility. If it consolidates Monday and Tuesday, then it'll probably go up on Wednesday, Thursday, and Friday. But it
The
might
market
not
almost
go up.
needed the correction though to an extent because things are, I'm not saying they're overextended, but to an extent they are. Things are up
No, everything
on
is.
so much. I mean, looking at Peloton, looking at Nautilus alone, those two. Uh, Pull up XPO if you don't mind. Uh, I mean, PEIX is a perfect example where that thing's just been pulling back like hell. But everything's got to consolidate and have some form of a pullback. Like look at freaking February, that tank right there on XPO. I mean, it hit it a record high or a very good high of just breaking $100 and it did all the way back. I bought in on that in 2016 down at 27, and yeah, it now
Well,
has
that was every
surpassed
stock,
that
man.
high.
And that's where so many people back in March and February, or March really,
Mm-hmm.
we're trying to find the bottom of that downtrend, right? Because
Yep.
that was what Warren Buffett was constantly trying to say, is that the fear in others instills greed in himself. And
Yep.
and that's what the way my brother was playing it. Whereas I switched to penny stocks, I switched to day trading, and I've made a good bit. But I could have switched to, I could have stuck to my long-term plays, which at the time were Tesla, Amazon, Dexcom, and IDXX, which have all done extremely well since that time. I could have stuck with those plays and made way more money than I did day trading. Uh, I'm going to stick with day trading because I see the potential. I see the potential in day trading. I
You've
just need
already
to
started learning something, and
yeah,
you've
I
come a
just need
long
to start
ways to
doing it right.
where why not
But
have another form of trading that you're successful with?
yeah, but at the same time, if you can recognize stuff like this in the market and take advantage of it, you can really, you know, really make it. That Tim Sykes talks about, oh, penny stocks are where it's at because sure you can play your 401k and make 3% gains and be rich in 30 years. But that's not what long-term investors do. There are long-term investors do let their money sit there, especially with dividend stocks. Oh, I want to show that real quick in just a second. But long-term investors, a true long-term investor, is going to move his money around, especially on something like this. Okay, as soon as a true long-term investor, so I got out up here with all my long-term. Okay, I got rid of them all up here. I held on to a couple of them that I didn't get rid of until May or April area. But I got rid of most of them up in this area. And that's what most of long-term investors are going to do, is get rid of them up here and go to something like bonds or something that's a lot less risk. Gold gold actually tanked during this time too, but Bitcoin, wherever, they're going to try to put their money somewhere where it's going to make money. But then they're going to be watching this to find that bottom. Because if you found that bottom on any of the, larger stocks, especially Tesla, Tesla was trading at $300 in March. If you bought it at $300, and that was before the split price, mind you, it went up to over 2,000. So
PEN was, I think, probably the biggest COVID play there was.
So PENN, I mean, it's pretty big.
Well, I was thinking, for some reason thinking it was it was down $5, sub $5.
But it's the same idea though, is that you had this uptrend, you already had this uptrend going into this crash that was not a market correction, mind you. Okay, this was caused by a virus. It wasn't considered the typical market correction. So it was caused by a virus. So it's going to continue that uptrend once it bounces. So anybody that found the bottom did great. Same thing with what you've got going on now, just for PIN, for example. It and DKNG, anything like that, has a downtrend right now. It's going to go back up, especially gambling. That's becoming more and more prevalent.
You're going to just see more people. There's more legalization going on and on.
Yeah,
and
so, more people are going to want to gamble. Just like the people playing the stock market right now. There's so many people.
What are you going to do in these winter months on the northern hemisphere when it's cold and COVID lockdowns are on the rise? You're going to sit at home, bored out of your mind. People are going to take their stimulus money, whatever country you're in. You're going to play the stocks. You're going to go gamble. You're going to blow your money and make money.
Yeah, exactly. Exactly. Let me just show you this Discord. So I'm going to go to this Discord here and go to the ticker news.
Stockbot? Oh.
No, go to dividends. So yeah, dividend. We've got this great dividend channel now. But I believe if you type in, I think you can do it from anywhere actually, but if you go to the dividends, actually type in dividend. So these are all with the ex-dividend date. These are all the tickers that have an ex-dividend date of Tuesday, meaning you can buy the stock on Monday and get in before the ex-dividend date is, which that means if you have shares in that stock when the ex-dividend date happens, you get the percentage. Okay. Now, it's not 9%. You're not going to get 9% of whatever you put in to AIV. Because if it's a 12-month dividend, then you have to divide that by 12. And it's the same thing if it's a 4-month or annual dividend, not annual, but quarterly dividend. You have to divide that percentage yield by 4. To actually get what you're going to get out of putting money into that stock, right? But
so
that would be.
If you're wanting to use something off of these, look for something off of these ex-divid dates. Now, take note. He did use the exclamation mark dividends. He can now go in and use another command that's exclamation mark dividend without the S, not plural. Put a space and then type your ticker off that list, and you'll actually get the current dividend and that percentage. So there's a couple different things that you can do and you can
That's the
find
amount.
it. Yeah.
Um, and that's actually the when you look at that dividend, that's the current, like you said, current dividend, not the one for this dividend date. That's the previous.
Right. So you at least have
Previous.
something to kind of, you have some form of history to go around as well.
To get you up. Yeah, exactly. History to go off of. Is it
That's
going up?
very
Dividend.
important.
You only want to be in a dividend stock that goes up. I'd look at the dividend on Benzinga Pro or wherever you can find it over a 2-year, 3-year, 4-year, 5-year, 6-year, 7-year time span. You want to see dividend stocks that increase their dividend amount. But anyway, yeah. So that yield percentage is your annual percentage yield. So that's yearly. So if it's a 12-month dividend, you'd want to divide it by 12. And quarterly dividend, you'd want to divide it by 4. If it's a 6-month dividend, again, same thing. You'd want to divide it by 2 or whatever. So just keep that in mind when you're looking at that. But it's something to keep in mind for people that are also going to be buying the stock. It's not necessarily something that you're going to want to get in for that dividend. Maybe you'll hold it just to get that dividend yield as well. But you may just want to keep an eye on those stocks to day trade. Obviously, you can do the math on the yield percentage and the amount, and it would give you an idea on the price of that stock as well. But if the dividend date, ex-dividend date is coming up, people are going to buy the stock to get in. So just keep that in mind as well.
Take note. I was actually just testing something out previously.
Okay.
There's actually a command up
cool.
above. It actually tells you that you can put a comma, do dividend, and put a comma between multiple tickers. But I was just kind of testing it out to see how it generate those results. But unfortunately, I guess I'll have to get with my buddy and let him know.
Yeah.
I'm gonna take a screenshot of that.
Not
I already got
working.
one.
So yeah, a lot of things happening, cool things happening on the server. I must say, in the right direction. Right now we've got a place where you can really, even if, in my opinion, me personally, if I was a stock trader and looking at this server and nobody was talking, I was just in here for educational tools, or even just now, just news resource. This is perfect for me. Even if people weren't talking. But then you had the watch list, you had the members, typing in their ideas. And,
I mean, it's only going to grow because we have members already. Boss Baby, Loki Wah, Mike B, Nazarene, just to name a few. They're already going in on the member watch list and posting their watch list ideas. And some of them are even going in and posting and sharing their trades that they've been successful. They're not necessarily putting entries and exits, but they're posting some trade info. So I mean, it's kind of cool because it's becoming a actual community. It's not necessarily like one of those ones that you see on Twitter or StockTwits with 20,000 members that's just full of noise and garbage. I mean,
yeah. No, I mean, yeah.
It's good to have these resources though. Like, yeah, the chat is the plus because you can discuss tickers and whatnot, but all the different scanners, the news, the dividend info, for example. I mean, like I said before, I'm going to go through and be posting on each one of those channels dedicated commands that people can use. So you can pull some news in there, but at the same time, you can go and pull specific to that request. So if you'll have all those commands right there for you. So you almost don't even need FinViz at that point. or
No, you don't
Bazinga
really
or
need anything.
anything. Yeah.
You don't
Now,
really need anything.
now like the scanners, obviously, yeah, there's a delay on that. You have to take note that some of this information is coming at you on a delayed time frame. But like, shoot, looking at the Bitcoin last price, from what I'm seeing, that's pretty darn accurate. Now we only have it. I
Yeah.
think we have it like on a 3-hour time period or so, and you can request it when you want. But it's pretty darn accurate. I haven't checked it down to the
Yeah.
minute kind of deal, but I also don't do crypto. So it's cool to see how
One thing that I
they're
did,
going.
I'm looking at, I did want to talk about is futures. So I'm looking at starting to trade futures. Probably, we'll see. We'll see how it goes. But I did want to explain kind of how futures work and the reason they're so risky, but the reason that you can also make so much money off of it with a small account is so the way that futures work, they're kind of like options. You're buying a contract, so you're not buying shares, so to speak. And this is the E-mini S&P 500 futures index that you're looking at right here on a 2,000 tick chart. 2,000 tick chart goes over, a fairly large time period. Now this one is only for today, so it doesn't have all 2,000 ticks on it. I could change it to much larger time period, but I've just got it set for today. But either way, I use an EMA line on this, EMA 21. That's all I really need to know which kind of direction the market is heading. But the way that the futures contract works is you got to have at least like $500 because you're buying one contract for $500. Okay. But these price points that you currently it's sitting at 32.71. Now it's lower than that, but that's a good example. But so it starts sitting at 32.71, and when it drops down to 32.70, if you were shorting the position, you would have made $50. So every point on this chart from 32.78, 32.70, that's 32.70, whatever, is $50. And so that's kind of where your risk comes in. Your risk comes in with you're using margin. It could drop as far as it needs to drop, and it can drop a lot. So it can drop a lot of points, 20 points, fairly quickly, and that's $50. Each point. So that's $1,000, and you only bought the share for 500. So something to keep in mind. Obviously, it can get out of hand really quickly. But the beauty with futures is that it doesn't. There are some news, obviously. Trump news, the election, probably going to have an impact on futures. But for the most part, they follow candlestick patterns and trends, so to speak. So if it's on an upward trend and it pulls back, this is what's called a two-legged pullback. So it was on an upward trend here that you see, and it pulls back once, spikes, pulls back again. You have a good idea that it's going to continue to spike. And so the way that you can play this with a small account is by scalping, because you can trade futures as many times as you want, over and over and over again. And if you have $1,000, you can actually play 2 futures contracts and make one a scalp and one a runner, meaning that once it hits that one point, all you're looking for is that one point. Once it hits that one point, you're selling that scalp, and you just made your $50. You're setting your stop loss on your runner to the point of where you sold the scalp. Okay? So if it keeps running further, you're going to make even more money on the runner. But if it drops any, it sells it at the scalp price, and you still made your $50 profit on each contract that you had. So you just made $100 off your initial $1,000 investment, or 10%, in a matter of couple seconds. That's how quickly these, goes from one point to another. It does it fairly quickly, especially during market hours. Right now, not moving nearly as much, but closer to the pre-market hours, it moves a lot faster. And market hours itself, it moves a lot faster as well. So it's beautiful because you can trade it 24/5. So 5 days a week, you can trade it at all hours. Can't trade it on the weekends until I believe it's 6 p.m. Sunday night. Is when you can start trading it. Is that what time it says? Yeah, 6 p.m. Sunday night. But then that goes all the way till Friday as well. So it's just a really easy way to make money. You could lose money. You just got to play the candle patterns, and that's the favorite pattern of a lot of futures traders is to trade the uptrend or downtrend. So on the downtrends, you want to stick to the sell side, and on the uptrends, you can stick to the buy side. And that's the other key point is you can short anytime you want to futures, or you can go long anytime you want to. It doesn't matter. So if you're playing the upside, then you're going to play up, and so that two-legged pullback is a favorite pattern people to use. Generally speaking, when it pulls back twice like that, it always and reverses that trend. And all you're looking to do is make those few scalps because you can trade 10, 20, 50, 100 times a day. You can make those $50 scalps over and over again. And just really, really increase your profits. And setting your stop loss, you can set it at whatever you want. You can set it at 50, 1 point, so you only ever lose $50 if you wanted to, and you'll have a lot more wins. You will have losses or losses if you're using candlestick patterns and following momentum. What happened. Don't go against the trend futures unless there's significant news to tell you to do so. But making that 1 point for $50 or 2 points for $50 or even more than that, like I said, during market hours, it moves a lot quicker. You could get 10 points, 20 points in a matter of just a couple minutes and really make your day off of a small account really, really easily. But then again, the same thing, you could ruin your day as well, just as easily if you're really not paying attention. So like right now, if we were watching, I wouldn't have played it at all during whatever you want to call this consolidation period. For one, it already did two-legged pullback. Okay, so we're on the third leg here. I don't know what the hell it's going to do in this case. Whereas up here, that was one pullback, two pullbacks. That was your point to play. It was on the second pullback. After that point, you're looking for another entry. And you could sit here for 2 hours and make, only 4 or 5 trades, but still make $1,000. But you're looking for the prime trades. You're not trading over and over again. You're not over trading and doing all that. You don't want to trade through this messy choppiness. You don't want to trade through any of this nonsense. You wouldn't want to trade it here. None of those were good spots. But this, where it had continued, it had started uptrend, pulled back once, pulled back twice. That's a solid trade spot right there. So just wanted to show that. That's another thing I'm looking at now is trading futures to see how, I can make trading happen while I'm still at my day job. Because currently my goal is to get to where I can quit my day job, but I'm not quite there yet. So right now I'm affected by the PDT rule mainly because all my accounts are spread out. if I consolidated all my accounts, I probably wouldn't be affected by the PDT rule, but I'm not willing to do that. So currently, until I can get one of those accounts over the hump, I'm affected by the PDT rule, which really changes your mindset. It makes you take bigger swings and go for home runs over singles, which can be a problem. Whereas if you just, if I had gone for measly 10% gains the whole time, or 5% gains even the whole time since March, I would already be out of the PDT rule. I've already done that math. I like to torture myself. That's one way that motivates me. Doesn't motivate everybody, so I don't recommend it. But it motivates me by torturing myself, saying, "Oh, I could have done this," or, "Oh, I could have made this much money," and stuff like that.
That's horrible mindset. I do not suggest that.
Yeah, that's how I get motivated. I don't suggest it, like Spaz said. Most people cannot handle that. You'll get FOMO. You'll get tons of bad trades doing that. So I do not recommend it. However, for me, it works. And so that's what I go off of. I like to look at what I could have made. And so in this instance, if I had just stuck to my 10%, 5% gains, that's how I started. When I started with this whole thing with $400 is what I started with. Stuck with, 5-10% gains, and I just ground my way up over a month. I had I had a great ROR, rate of return, and so I should have just stuck with that, and I would have been out of the PDT rule by now. But that's what I'm trying to say. You get in that mindset that you need to take home runs instead of singles, and yada yada yada. Maybe something
Don't
else.
necessarily look at it the way you do, or I don't necessarily look at it the way you do. I look at it as, yeah, I may have missed out, but that's where I'll take that example that I was watching. I didn't take my opportunity that I knew I should have, and I'll look at it for it elsewhere. But so definitely use it as learning opportunity, but also don't chase something. It can.
Yeah, exactly.
But
exactly. So
make sure you're reading your indicators.
Well, I mean, that's what I've been trying to explain to Lokiwa is that, he keeps talking about I'm getting better at trading and blah, 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 and all that. And sometimes it's not about trading. And I know that Aaron would disagree with me. Aaron says you need to trade. And until you make the trades, whatever. But that's, in my opinion, that's not necessarily true. And if you've watched any of Tim Kurtani videos, he really didn't trade so much in the first 9 months.
Charting time is what it's all about. And I mean, those that kind of know what I've been doing lately, I haven't been really trading. I might take a small execution here or there, and I mean like under 25 shares, maybe 25 shares, if that.
Yeah,
just to have a trade. And to test a strategy that I've been working on, or use a previous strategy, whatever the case may be. But
don't go in deep or anything like that.
It's more about the chart time.
Having you're trying to learn.
And learning those indicators, learning the movements, learning those patterns, learning the level 2.
Exactly.
I mean,
studying.
It goes on. Studying it and putting in the time, that's what counts.
And learning what indicators.
I mean, at that point, people say you might as well be paper trading. No, I disagree. I mean, I don't need to necessarily go do paper trading. I mean, at that point, yeah, I could be kind of more active in a sense, but I'd rather be just right there on my charting to where if I do see a play that I want to jump into, I will. Because I'm watching the market constantly. Watching the news, alerting news as I see it, whatever it may be. So I'm looking for those opportunities. I'm just not taking
it. And that's what I mean. That's the whole point, to find all these indicators or use whatever charting platform you want. It doesn't really fucking matter. But what matters is that you're looking at the indicators that everybody else is looking at. All right? Don't come up with a grand new plan of looking up at EMA 35 or 37 because nobody else looks at EMA 37. So that's not going to be a great indicator, okay? But you see all these lines on my screen, and they're all different indicators. There's VWAP, everybody uses. EMA, I think that's 4. But and
That's
then
EMA
there's
20
moving average,
or
like,
MA.
oh yeah, that's
Yeah, SMA.
EMA 20. EMA 20. A lot of people use that. EMA 4. A lot of people use that. EMA, like I think it's 10, 9 or
I've
10.
said it multiple times. EMA 4 and SMA 9 is by far one of my favorite intraday day trading patterns because you can confirm the trend.
Mm-hmm.
Now you obviously are still wanting to kind of watch it, and in a way you're almost you could be scalping doing that at the same time. That's perfect setup for scalping, in fact. But especially when you're getting in something off news or insider buys or acquisitions and mergers like recently, EV
Yeah, 'cause
plays.
it's
I
gonna
mean, you
bounce
name
off
it.
that shit.
Those things
It's
are
gonna
just going to
bounce.
continue. And when you have that separation between that EMA 4 and the SMA 9, you'll be able to confirm the trend. And once it breaks the SMA 9, you find you hopefully are having your exit. You're not getting stopped out too far down. Hopefully you're getting out before any of that. But just you can ride the free shares like you say.
Oh yeah, ride the free shares is the best way to play. But having all these
Especially with that
indicators, and you
strategy,
don't,
I haven't even thought about that till now. I'm definitely gonna keep that in mind. Because
oh
I mean,
yeah,
I'm trying to get to the point to where I can ride the free shares. I'm not, my accounts, in my opinion, is not to that point. I mean, if I'm going heavy in on something, then there's the possibility that
here's
if I'm
the
getting the right
beauty.
runner or whatnot. But
Here's the beauty with riding the free shares, and what I've told the Loki Y as well, when we've just been talking, is that let's say you started back in March or wherever this year, started with COVID. A lot of people did. And you just played the free shares the whole time. You were playing free shares the whole time. You played every single spike and always took free shares. Okay. So right now, by now, your portfolio is probably would be filled with maybe 200 different tickers
oh yeah,
of free shares, of free fucking shares that you're just sitting on, and you're just
if I
waiting
only
for
knew of
any,
that strategy back then,
yeah,
that
any
would have
of those
been game
tickers.
changer.
Yeah, you're just waiting for any of those tickers to just go fucking parabolic, and that's when you're selling that ticker. All the rest
Shoot,
of
I
them,
would
you're
have been
holding on to.
riding. I would have been
It's
riding
all, yeah,
SPCE, XSPA, way before it even actually was doing anything and had a reverse
yeah,
split. And
exactly. And
same thing with
that's what I'm saying.
Mark. I mean, you name it.
You could ride all that stuff with free shares, and that's what all these pumpers are doing. I guarantee it is they're riding free shares, and so you've got all these stocks that are free shares, and you're just all that is a bank account. You can sell
Yeah,
those stocks at any point, and that's profit. All that is profit. So if you
yeah,
want to know
it's
what you
crazy because that's
profited,
where you have these crazy runs, these insane spiking days. I mean, I'm not necessarily saying. Well, like, you can say Kodak after its pumping day. Now those were bag holders getting out, but the people that were riding the free shares, they're the ones that were buying it in on that low, adding to their positions. Not necessarily just them, but obviously other buyers as well. After the shorts getting out, getting squeezed out and whatnot, and it freaking just shoot up again. And they're
well,
taking those free shares, and they've already added to it to where they're taking more free shares, or they're
Kodak is a
just eventually
beautiful
cleaning
example.
out.
So Kodak is a beautiful example because Kodak is one where you could have bought it at $3 a share. If you saw the news
Mm-hmm.
that morning, you had plenty of time to buy it at $3 a share before it went parabolic to like $7 or $8 or $9 a share, whatever it went to $10. Okay, so you bought it then and you sold at 10, right? And locked in your free shares. You're sitting a shitload of free shares at this point.
Oh
You're
yeah.
sitting at two times your original entry on free shares alone. Okay, and you're holding those into Trump's little after hours press conference where he talks about it, and it goes all the way to 50. You get to ride all the way to 50 on free fucking shares.
Yep.
Okay, so that's a prime example of why it's great to hold free shares. Like I said, it's all profit, so it doesn't matter if a fucking offering comes out and it tanks. If it's sitting at $5 a share and it's all of a sudden sitting at $3 a share, so what? You lost some profit, but it's all fucking profit. So
And it's not
you
often
were
that those
taking,
things happen. I mean, obviously
yeah,
Trump
you were,
was the big impactor on that one. I mean, and NKLA was obviously another one. Shoot, early on
yeah,
in COVID,
and
Codex,
that's where you kind of got
CODX
to
was
know.
one. So I mean, like, there's different things that set things off that were pumped up that were prime
Yeah,
plays, but it's
you
just
gotta have an idea
getting
when to
in.
get out.
Exactly.
Sometimes it's when
Exactly.
to get out. So Kodak, obviously, I would have gotten out if I was riding free shares. When it went to 50, I would have gotten out in that spike. That's fine for me. I don't need, if I want to hold a few more free shares for later on down the road,
Watch
whatever.
these things
Uh,
just take
you know,
off once when
that's
the market
fine.
bounces. Those things are
But
probably just gonna freaking
same
fly.
thing with like if you did, Invax. So let's say you did the free share route on Invax from
Oh
March.
yeah, I missed
If
that.
you were playing the stocks, you would have had a ton of free shares, right? Well, once it went to $200, I would have been out of that free share position. I probably would have been out way before that.
Yeah.
Yeah. Um,
It's funny
but
because
that's
I'm pretty sure if I went to my trade log, I'm pretty sure I traded Nvax. Like,
I did. I did when it was $8 a share. Yeah.
that's kind of
Same with
like,
INO. INO is the same thing. INO, you
yep,
ride it to
yep.
$30 when it was at a high. You sell it. Don't worry about, okay,
I was pissed when those took
you know,
off.
that's when you
I
want
didn't,
to
I
get rid
also
of the
didn't know
free
what
share.
the hell I was doing back then. Like, I was literally using Robinhood.
But
I had a
that's
friend
the
that was
key.
talking it up and be like, "Hey, here's some news. It'll give you the news. Just trade off your." I wasn't trading anything that it was telling me to trade.
It doesn't matter how shitty a stock is, right? It doesn't matter if it has the
It
volatility
doesn't.
where you can get 10% swings here and there. You can take free shares the whole time,
Yep.
and it could be as shitty as you fucking want. You could take,
It's just
uh,
getting the right
uh,
entries and
instead of
knowing
taking free
when.
shares, you could take free shares plus $10. Okay, I made $10 on this trade, and I've got free shares locked in. Okay, you don't
Yep.
always have to just take the free shares. You can take a little bit of profit if you want. Just leave some free shares in there so
Yep.
that if it does go, and so on something that you're
Obviously, your
highly
positioning
interested in,
does go into consideration on it. Um,
yeah,
People that don't
and
know how to do that, I mean, you do have to. I mean, it's not hard math to fucking do. You know your entry costs and such, but you obviously want to have your position entry to where if you're at that 10% gain, you're holding a little bit of something. You're not just, okay, well, I'm stuck with 1 share, 5 shares, 100 shares. I mean, obviously, hopefully you'd be able to get that 100 free shares or whatever. Um, but
yeah,
obviously that's with a larger portfolio, or at the same time, it just really depends on what you're trading. If you're in those pennies like I am, I mean, that's going to be a lot easier to handle, especially with the volatility in these things right now. But
yep. But
especially when it comes to the
that's
EV
just it.
plays.
When it comes to anything that you're long on, if you would play the free share route, you would find it would
Hmm.
be so much easier to be long on that position because you just don't care. You just don't care as much. I understand it's still money. Money's money. Everybody cares money, but because it's not a loss, you just don't care as much. It just doesn't trigger that emotion that forces you to sell too early or whatever the case may be. Um, it doesn't trigger that emotion. So um, I really highly recommend at least trying it out. Uh, anybody, anybody that you know, at least try it out. Try it out tomorrow. Try it out the next day. If you buy 100 shares of this stock and it goes up 20%, sell 80 shares and keep 20 shares.
Yep.
And just who cares? free. You got your money back. So what? You didn't make any money. Who cares?
Yeah, you don't.
got-
You want to at least have some form of gains on it. You don't want to take your exit with like $1 or something like that necessarily. Be
beauty-
smart about it.
No, but the beauty is that you can sell that position at any time and have that.
Exactly.
Whatever dollar value it is that's what it's going to be. And that's the important part, is that when you're looking at your P&L on that, I don't know any broker that would actually show it correctly. Because your P&L, if you bought the stock at $1 and you sold it at $2 and only locked in your free shares, if it ever drops below $1, it's going to show a loss on your P&L, even though that's technically not a loss. It's only a loss because your original entry cost. But since you already made your profit back, you're not at a loss, still a profit. Yes, yes, indeed. Yes, indeed. I think that's enough for me. I got to